Ladies and gentlemen, good day and welcome to the Saatvik Green Energy Q2 FY26 earnings conference call. As a reminder, all the participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kunal Shah. Thank you and over to you.
We welcome everyone to the 2Q FY26 earnings call of Saatvik Green Energy Limited. We have on the call the senior management, Mr. Nilesh Garg, Chairman and MD, Mr. Prashant Mathur, the CEO, and Mr. Avneesh Jha, the CFO. At this point, I would like to hand over the call to the senior management for their opening remarks. Thanks, and over to you, sir.
Hi, good morning, everyone, and a very warm welcome to the Quarter 2 and first half FY26 earnings call of Saatvik Green Energy Limited. I hope you and your families had a wonderful festive season. It gives me a great pleasure to connect with all our investors, analysts, and stakeholders once again. The first half of this financial year has been a period of strong operational execution, strategic progress, and continued growth for Saatvik. The renewable energy sector in India is at a pivotal stage of transformation, with the government's target of achieving 500 gigawatt of non-fossil fuel capacity by 2030 and initiatives like PM Surya Ghar Muft Bijli Yojana, PM Kusum, and the CPSU scheme Phase 2. The policy environment is extremely supportive of domestic solar manufacturing. At the same time, India's energy demand is expected to grow at a CAGR of 5.5 to 6% through FY 2030, creating enormous opportunities for capacity expansion and technological advancement across the renewable energy value chain. Amid this evolving landscape, Saatvik has further strengthened its position as one of India's leading solar module manufacturers, built on a foundation of quality, technology, and reliability. Our strategic focus remains on scaling capacity, expanding our technology base, and building an integrated presence across the solar value chain. During the quarter, we continued to make significant progress on all our key priorities: expanding manufacturing capacity, deepening customer relationships, enhancing backward integration, and diversifying our product portfolio. Our Ambala facility is now fully operational at an annual capacity of 4.8 gigawatts, and we have achieved high levels of utilization supported by a strong order pipeline and repeat business from marquee customers. With strong execution in the first half and a healthy order pipeline, we are well on track to achieve our yearly targets. The steady progress across our manufacturing operations and project pipeline gives us clear visibility to deliver on a full year growth and profitability range. I am also pleased to share that our Greenfield integrated project in Odisha, comprising 4 gigawatt of module and 4.8 gigawatt of solar cell capacity, is progressing well on schedule. We expect the first phase to be up within our target date. Once commissioned, this facility will be a major milestone in Saatvik's journey towards full backward integration, strengthening our cost competitiveness and contributing meaningfully to our growth trajectory in the coming years. Another key highlight is the successful launch of our Uday series of on-grid solar inverters, marking Saatvik's entry into the distributed solar and B2C segments. This initiative expands our presence across the solar value chain, positioning Saatvik as a comprehensive solar solution provider, offering modules, inverters, and EPC services under one trusted brand. Our consistent focus on high-efficiency modules, technological excellence, and dependable delivery timelines continues to differentiate Saatvik in an increasingly competitive market. With a robust balance sheet, strong order visibility, and clear strategic direction, we are confident of sustaining this growth momentum in the years ahead. With that, I would now like to invite our Chief Financial Officer, Mr. Avneesh Jha, to take you through the detailed financial performance for the period. Thank you.
Thank you, Nilesh. Good morning, everyone, and thank you for joining the Saatvik Green Energy Limited earnings call. I hope you have all had the chance to look through our Q2 and H1 FY26 results and the investors presentation, which are accessible on both the stock exchanges and our website. I'm pleased to share that Q2 and H1 FY26 have been among the strongest period in Saatvik's history, reflecting the company's solid execution, the strong demand environment, and disciplined financial management. Let me now take you through the financial highlights. Revenue from operation for H1 FY26 stood at 16,838 million, representing a robust 133% growth year-on-year, compared to 7,213 million in H1 FY25. EBITDA for the first half grew 135% year-on-year to 3,046 million, as against 1,295 million last year, with EBITDA margins at 18.09%, sustaining healthy double-digit levels despite the rapid scale-up. Profit before tax increased to 2,458 million, up 135% year-on-year, while profit after tax rose to 2,021 million, marking a 146% year-on-year increase from 823 million in the previous year. During the H1 FY26, we had a high capacity utilization of 82.34%. For the second quarter alone, revenue stood at 7,680 million, up 62% year-on-year, with a PAT of 832 million, an increase of 36% over the same period last year. EBITDA for Q2 was 1,235 million, translating to margins of 16.08%. On a sequential basis, when compared to Q1 FY26, the company reported a moderation in performance. Revenue stood at 7,680 million in Q2 FY26, as against 9,157 million in Q1 FY26. EBITDA was 1,235 million compared to 1,811 million in the previous quarter, while PAT stood at 832 million versus 1,188 million in Q1. This dip was largely on account of the monsoon season impacting project execution, delays in customer project schedules, and the deferment of deliveries following the GST rate reduction. These factors are temporary in nature, and we expect a rebound from Q3 onwards as execution picks up. Saatvik remains financially strong and disciplined. The debt-to-equity ratio improved significantly to 0.44 compared to 1.36 in the previous year. Our return on capital employed for H1 FY26 stands at 21.85%, demonstrating robust profitability and efficient capital utilization. The company's order books remain healthy at approximately 4.68 gigawatts as of 30 September 2025, providing a strong visibility for the coming quarters. Capacity utilization during Q2 averaged over 83%. On the operational front, we successfully scaled our Ambala manufacturing facility to 4.8 gigawatts during the quarter. The Odisha Greenfield integrated project with 4 gigawatts of module and 4.8 gigawatts of solar cell capacity continues to progress on schedule, with phase 1 commissioning expected in Q4 FY26. Post the close of the quarter, I am happy to share that our subsidiary, Saatvik Solar Industries Private Limited, has received and accepted new domestic orders worth approximately 2,994 million from 3 leading independent power producers and EPC players. These repeat orders scheduled for execution between December 25 and March 26 further strengthen our revenue visibility and reaffirm customer confidence in our capabilities. Overall, the first half of FY26 reaffirmed that Saatvik's growth is both accelerated and sustainable. Our strong top-line expansion, consistent margins, and improved capital structure highlight a scalable and disciplined business model. Looking ahead, we remain focused. With a strong order book, expanded capacity, and solid financial foundation, Saatvik enters the second half of FY26 with confidence and clear visibility for sustained growth. Thank you very much.
So can we begin with the question and answer session?
Yes.
Okay. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Raman from Squint Investments. Please go ahead.
Hello, sir. Good morning. I'm fairly new to the company. I just want to understand that we have a current module capacity of 4.8 gigawatts, and we have a greenfield capex coming, which will be coming in FY27. What will be our module capacity at the end of FY27, and will there be any cell capacity also commercially operationalized?
Yeah, good morning. I'm Prashant Mathur. After this Odisha project of module is commissioned, our capacity for module will be 8.8 gigawatt. Along with it, we are coming up with cell capacities also of 4.8 gigawatt, which will be in two phases. The first phase is 2.4 gigawatt. So module will be commissioned in the end of this financial year, and we should see revenues coming in the beginning of FY27. And the cell will also come along the same time, but it takes a little more time to stabilize. So we expect the revenues from it to come from the second half of FY27.
So basically, by Q4, you will be having 2.8 gigawatt of cell capacity, and assuming it will take 3 to 4 months to stabilize, from Q2, Q3 onwards, your cell revenue will also start contributing towards your top line, right?
Yes, around the same time. So first phase is 2.4 gigawatt, and the second phase will be after that. So it will be following 2.4 gigawatt. So 2.4 cell should come somewhere around the third quarter of of the next financial year.
The phase 2, remaining 2.4. Okay.
Yeah, so
Hello.
that will be following this capacity. So we are expecting around 6 to 9 months for the 2.4 additional to come online.
Okay. And sir, how much incremental revenue are you expecting from this cell capacity to grow in FY27?
So cell basically helps more on the EBITDA and the PAT side, because cell will ultimately be consumed internally for our modules. So additional profit is what we are expecting from the addition of our cells. However, module capacities which we are adding will give additional revenues in our balance sheet.
Understood, sir. Sir, I also, from the presentation, I can see you have a solar pump and inverter division also. You have recently forayed into solar inverter. What was the revenue from solar pump in first half, and how are you planning it to scale in FY27? And similar with respect to the solar inverter, how are you planning to scale this revenue from solar inverter in FY27? If you can provide any guidance, it will be helpful.
Yes. So solar pump was incubated last financial year, and in the first half of this financial year, we have executed about 395 pumps and with a revenue of 9.41 crores. And this is expected, more executions are expected in the second half of the year. Inverters are very new. We have launched it about a month back, and we already started booking revenue on it. We will be able to give you more numbers, clarity in the next quarter results. Hello?
Hello, can you hear me?
Yeah.
Yes.
So, just a follow-up on the solar pump division. In FY27, can we scale this division to, let's say, about 50 crores?
Difficult to give a number, but yes, that expectations are reasonable.
Okay, sir. So, my last question is with respect to the order book. We have 4.68 gigawatts of order book. What's the execution period? And, can you, if possible, can you give us the order book pipeline and what's the win rate?
Yeah. So 4.68 gigawatt is as on 30th September. We add new orders, and we also supply out of these orders. The order book is normally from 9 to 12 months, and the order book continuously gets added. So yeah, so that's on the order book. Now, since we will have our Odisha capacity also coming in the end of this financial year, so our current order book demonstrates almost 97% of our installed capacity, which denotes that almost all our capacities are booked for the year. Also in this order book, we do not quantify spot orders as well as the distributors' retail orders because they are very short-term orders, and they come and get dispatched in a very short cycle. So that are also very significant, numbers, but these are not in the order book.
Okay, understood. I'll join back in the queue. Thank you.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Yash, an individual investor. Please go ahead.
Hi, sir. I have a couple of questions. My first question is regarding revenue and margin guidance for upcoming quarters. So can you elaborate on the same?
Yeah, good morning, Mr. Yash. So on the revenue guidance, we have continuously been growing at the CAGR of 88% in the last few years. What I can say is that we will continue to give good and strong results, and we expect to grow in around the similar kind of range in this financial year as well.
And sir, what is on EBITDA front? Like,
On the
what is
EBITDA
the
front
sustainable
also,
EBITDA?
yeah, on the EBITDA front also, our last year EBITDA was around 16.5% overall in the year, and we expect that this year also will be in the similar range, and so you can calculate the kind of results we should expect in the coming quarters as well.
Okay, sir. My other question is, sir, regarding tax, sir. What is the we can expect average tax rate as it is very much fluctuating in quarter 1 and quarter 2. So what can we expect the average tax rate for FY26?
Tax rate?
Yes.
Yeah. So, our subsidiary, Saatvik Solar, has the preferred income tax rate, which is at the rate of 15%. So, if you will see the trend, if on the overall percentage to the revenue, it is on the downward trends because more and more revenue is coming from the subsidiaries, the latest technology capacity. So, as the revenue grows from that particular company, the tax rate will further rationalize. So, in Saatvik Green Energy, we have normal tax rate, while in comparison, Saatvik Solar has a preferred rate at the rate of 15%. So, more revenue from Saatvik Solar, the lower tax rate overall.
Okay, but can you provide the range? Like, what will be the average rate for FY26?
So I have told you the 15% income tax rate in Saatvik Solar and 25% in Saatvik Green Energy Limited. So we are expecting more revenue to come from Saatvik Solar Industries. So you can see the tax around in the range of about 20%, 18 to 20%.
Okay.
Yeah.
And my last question is about the order inflow. Like at the end of FY26, we are about to have 8.8 gigawatt of capacity, and our current order book is around 4.8. So what is the order flow intake for FY27? If you can guide on the same.
Yeah. So, order is a reflection of your capacity. So, our capacity was 3.8 gigawatt till a month back. Recently, we have added 1 gigawatt in Ambala, so now we are 4.8 gigawatt. So it is reflective in our order book also. Last quarter, our order book was at 4 gigawatt, 4.01 or 4.05. Previous to that was around 3.6 gigawatts. So as our capacities are growing, we are booking more orders. Since these orders have to be executed in 9 to 12 months, so as the visibility of our new line will be coming, we will start booking our orders by the end of Q3, because that will be reflective of our new capacities. Also, when you are adding capacity like 4 gigawatt, we are adding modules in Odisha, it takes little time to ramp up also and optimize the equipment. So the revenue from that 4 gigawatt will also kind of get ramped up in 3-4 months. The production from those as well. So we will keep booking orders based on our capacities.
Okay. Got it, sir. So I want to talk regarding macro front.
Sorry to
Hi,
interrupt,
yes.
but may I request you to join the question queue again?
Okay. Thank you.
Thank you. The next question comes from the line of Dhruv from HDFC AMC. Please go ahead.
Yeah, sir. Thank you so much. Sir, you have given the production numbers of module, and if I just do a realization and EBITDA calculation based on the production numbers, I see that the realization and EBITDA has declined per watt basis. The EBITDA and realization has declined in Q2 versus Q1. I'm not sure if this is the right representation, so if it would be helpful if you can give the sales number also, please, of modules.
Sales numbers.
Sales number in terms of so Dhruv, you want
Megawatt,
in terms of
Yeah, module sales megawatt for 1Q and 2Q, and even if possible for same year last quarter. Same quarter last year.
Okay, just let me get out there. Yeah, just a minute.
So Q1, okay, you can give, I think you will have the number. Total sales megawatt.
Yeah. So in 6 months last year, till September 2024, our total sales in megawatt is 426. This year we have done 1138 megawatt.
So if you can split for 1Q and 2Q also, please, for this year, and same for last year.
So in Q1 last year, we have done 268 megawatt in the first quarter, against which we have done in June 25, 519.
June
599 megawatt. And so that is in Q1. In overall, for
No.
no, that's
Yeah.
So for overall, this year we have done 1,138 megawatt against 426 megawatt.
Against 436. Okay. Okay. So just one second. Okay. Your production has increased QQ. Your module sales are down. So just wanted to understand what is driving this, and is there some abnormality here?
Yeah. So there were two factors. One was heavy rains. So there were about 4 to 5 months of continuous rains in this quarter. And also because module GST has reduced from 12 to 5%. So the sales were, it was announced on 4th of September. So from 4th of September to 22nd September, which is about 18 days, the billing was not happening because the customer, mostly the developers, they do not have an output on the GST, and there was a significant reduction in the GST. So we could not recognize the revenue. The invoicing happened, but our policy is that until the dispatch also happens, we do not recognize the revenue. So you see that the production has increased, but the sale did not happen because we were left only from 22nd is when the billing started. And there was big shortage of trucks and logistics availability because the same was happening across the board, electronics, cars, everywhere. There was the sales at stoppage, so transport was not available. That has affected the numbers which are visible. And because of that also, since the expenses were booked, revenue was not booked, you also see the impact of that in the EBITDA and the profit also.
Okay, got it. And so from October onwards, so after 22nd September and then October onwards, have you seen that ramp up in the sales run rate? And has it caught up to your production levels?
Yes, of course, that has increased. Also, rains in North India has kind of stopped, but in Maharashtra and in some Gujarat and also in the south and also in Odisha, those kind of areas, still water logging is there on site. And when you have those kind of situations, and this is a situation which was quite abnormal and kind of a double whammy, water as well as GST and transport. So it is now stabilizing, and you will see the impact of positive impact in the quarter 3.
Got it. And so is it possible to quantify? I don't know if it is one can deduce that, but what is the impact of this excess cost in your numbers in say 2Q? Because you did the production, but you were not able to sell it, so probably there's some extra cost allocated there. So is it possible to quantify that? Because to some degree, your EBITDA is reflecting that impact.
It's not fair to quantify it because it is a complex, but I think.
So, Dhruv, so what is, so that won't be a kind of a major chunk of overheads. The large part of overheads is coming for the periodic provisioning what we have done in the financials. Now, if you have gone through the financials in totality, so the impact is on the overhead is 22 crores in compared to the previous year same period. Now, if you will see the reasons for it, there are a few reasons which I would like to mention here. The majority of them, without quantifying those, is as per accounting standards, you have to reinstate your liability on the closing day of the any period. So in this case, 6 months. So the major impact of overheads come from the foreign exchange fluctuations. Then there are, since we have now done the IPOs, there are certain IPO expenses, some part of IPO expenses which cannot be set through the IPO profits. So therefore, it has to go to the P&L account, which is one-time adjustment. Okay. Then there are, since our sale is on the high level, so we have to have a larger working capital. And to get those working capital, you have to spend some money on that as well. So these are the 3-4 expenses which are largely the contributor in the higher overhead. Some of them are one time, and like foreign exchange fluctuations are the accounting treatment. So it will continue. So if you will say add back to your the number what we have reporting, you will get perhaps the same kind of profitability ratios as we have shown in the Q1.
Okay, got it. So the unit and percentage profitability remains broadly the same if you add back all these, one can say one-offs or whatever. Yeah. Got it. Perfect. This makes sense. And sir, the last question is on the expansion plan, the Odisha plant. What are the key milestones that you are tracking in terms of, the project is coming on track? What do you expect? Say, for example, Q4, the cell plant is coming there. So, for example, land leveling is done, the utility is probably, say, 30-40%. I don't know. If you can share some, physical parameters as to where the project is to get better comfort in terms of the commissioning timeline.
Yeah. So the project has various steps. One is the civil work, and the other is the shed erection and the utilities. The other is the equipment, and then installation and electrical. So everything is moving as per the plan. We are starting our PEB erection in next week or so, and it normally takes about 45 to 60 days for the PEB erection, and we are targeting from February we will start our equipment inside the plant and installation in next 4 weeks, and should start our production by end of March. So that is the kind of steps which we are taking.
Got it. And the technical expertise to install the plants and all those in terms of resource availability, getting, the visa approvals and all those, that's going on very smoothly now.
Yes. That problem is no longer a problem in India now. Chinese visas are also coming, and also you have technical skill set available. There are Chinese as well as Taiwanese, Thai, Cambodia, Laos, Indonesia. So there are enough cell lines also outside China, and skill set is available. And also now India also has a skill set available. So it's not a black box anymore. Setting up cell line.
And all the necessary approvals have already been obtained from the government, and there is no stoppage now on any front.
Got it. Perfect, sir. Great. Thank you so much and all the best. Thank you.
Thank you.
Thank you. The next question comes from the line of Mangesh from All Cargo Family Office. Please go ahead.
Good morning, sir. Hope I'm audible.
Yes, sir. Good morning.
Yes. Sir, a couple of questions. First, basically just wanted to understand the trend in realization for your upcoming quarters for the module. If you can share that number, say, in terms of cents per watt or rupees per watt. So what kind of trajectory you are seeing on the pricing side of the module still?
Sorry, your voice was not clear, but as I understand, you're asking about the trend of the realization?
Yes, sir. Yes.
Okay. So that module prices currently are in the range of about 15 cents, 14.5, 15.5 cents, 16 cents. That's the price which modules are selling at. And EBITDA normally is around 16% EBITDA. That is the kind of realization you can even expect.
So basically, for your upcoming orders, are we keeping this similar realizing the similar trends, or are you seeing some pressure on it? That's what I wanted to understand.
No, we are keeping around the same numbers. We are not seeing much pressure because the demand market has quite significant demand. And also now, second half of the year is normally very, very busy because first half you have first quarter you have budgets, new budgets coming, depreciation benefit has been taken in the last quarter, then you have rains, you have several festivals. So normally everything gets sorted out by the end of second quarter, and third and fourth quarter are normally very busy anyways. So I think we should see good flow, good dispatches, and demand is also quite strong right now. So no pressure on that front.
Great, sir. Great. Good to hear. And just wanted to also understand, your revenue breakup in terms of, how much is for IPP, C&I, and how much would be the retail or other parts. You can give, that number.
Okay. So, when you have those kind of volumes, you have large customers, and so our utility segment is almost 70% of our sales. And retail C&I is about 25% of our sales. EPC is about 3%. Export is 0.5%, 0.4%.
Got it, sir. Last question is on, Odisha 4.8 gigawatt cell plant. Just wanted to understand what is the total capex only for the cell plant, and has there been any, upward revisions or downward revisions in the total capex for this?
No. So the total capex which we are doing only on cell project is 1,300 crores for 2.4 gigawatt. And so there is no upward revision in the project cost.
Understood, sir. Thank you. Thank you, sir.
Thank you. The next question comes from the line of Piyush Chadha from Sirandeep. Please go ahead.
Hi, thank you for the opportunity. Just very quickly, we would have around 1.2 gigawatts of module capacity in Q3 and Q4 of this financial year. Would it be fair to assume that we would be able to produce and sell around 1 gigawatt each quarter?
Sorry, we missed your question. Can you please repeat?
Yes, of course. We have around 1.2 gigawatts of cell capacity per quarter for Q3 and Q4. Would that be correct?
Mm-hmm. Yes.
Sorry, module capacity, not cell capacity. And if we have 1.2 gigawatts of capacity, would it be fair to assume that around about 1 gigawatt can be produced and sold each quarter?
So we will have 2.4 gigawatt cell capacity in the second half of FY27.
My apologies. I actually meant module. I used the wrong word. For Q3, Q4 of this financial year, we would have module capacity of 1.2 gigawatts per quarter.
Oh,
because
okay.
Today,
You're dividing 4.8 by 4. Okay. Yes. Oh, so you're saying 1 gigawatt per quarter is what you're saying? Will we be able to sell? Yeah, it is fair to assume that your numbers are on track. Yeah.
And 1 megawatt is roughly around about 1.2, 1.3 crores worth of value today from our is what we would invoice?
Correct. Yeah, 1 gigawatt will be about 1,250 crores, 1,300 crores. Yeah.
Would it also be fair to assume that module sales are around about 85-90% of our revenue, or would they be even more?
Even more, I think, at this point of time.
Great. Thank you. That answers my question. Thanks a lot.
Thank you.
Thank you.
The next question comes from the line of Darshil Jhaveri from Crown Capital. Please go ahead.
Hello. Good morning, sir. Thank you so much for taking my question, sir. Hopefully, I'm audible.
Yes,
Yeah.
Mr. Saatvik.
Hello. Yeah. Hi, sir. So, my questions were a bit in line with our previous participants' questions only. So basically, I think if we calculate H1, H2, right, last year, H1 was 33% of our revenue and H2 is 66%. So is that a fair, assumption that we can make? Because based on what we answered to the previous participant, 1 gigawatt can give us a realization of around 1,200 crores. So in H2, we should be able to do 2,400 crores? Roughly.
So it will be difficult to quantify, but as Mr. Prashant Mathur has said in his earlier reply, that we are on track to achieve our projected numbers, and we would be in the same proportion of sale as we have done in last year.
Okay. So same proportion of H1, H2 of last year can be done. So like the 80% growth that we are saying, that we maintain, right?
Yeah, smart question, but
Yeah.
we have already provided our response on this.
Yeah. Okay. Fair enough. And just wanted to know any chance of like any execution delays, because when you say some people are not accepting orders, so is there a risk on that behind, or all that was just because of GST, right? Just wanted to know, like in terms of like we've been able to produce, so is the offtake also happening in the similar manner that we are producing?
Yes. Offtake is happening. Um, you know, when GST reduction was happening, even white goods and daily needs also people were postponing. So this is a product where 12% was becoming 5% straight. It was a 7% reduction, and project cost, major reduction in the project cost also. So people postponed it, and because when you have that kind of reduction in the project cost, so overall it is fantastic for the industry, because now solar projects can be done at a lower, because you don't have a GST output in power selling. So for the developer, it is great. So we don't see any issues on the offtake, and overall it is a big positive for the industry.
Oh, okay, fair enough. So just last question from my end. Like, there are a lot of players right now, like, who are building up capacity, and I know next year there is going to be a lot of capacity coming online. Like, even we are, nearly doubling our capacity. So as an industry, like, I understand a lot of government initiatives are there, so to produce, support the demand. But do we see a place where, even if demand is there, will we have to resort to some kind of price cutting or something like that? Because there's a lot of capacities coming in. Like if we listen to every player in this industry, they want to increase capacity. So just wanted to, get your two thoughts of that. That we'll be able to protect our realizations, because I think that's the basis on which we would have done our capex, right? So, just wanted to know, what do you feel about that, sir?
So, when you have such a high demand and such a fast-growing industry, you will have naturally new players coming in. And there are many aspects which are linked to this question, because on one side, like if you see our history also, in our 10 years, first 4 years we have spent on our field tests, the customers, because any large customer, these all projects are backed by financial institutions, and financial institutions require a long-term reliability field test, how the module has performed over years, and to build that credibility takes years. Also, you have bankability requirement, you have Munich Re, so all that third-party audit. So it's not a product which you set up manufacturing as a new entrant and you start selling volume. So it takes 3-4 years to build that credibility in the market. So we are not kind of worried on new entrants coming in. One part. The other part is, so they will also spend the same kind of time to build that credibility. They can ship small quantities to price-sensitive customers, but for large customers, for credible, and this industry has also evolved over years. So customers have also become more and more, educated. The other thing is that there is a technology transition which is happening in the industry. So, mono PERC is becoming obsolete. Over, I think over a year it will become completely obsolete. And then you have TOPCon. So there are significant mono PERC capacities also which are there in the ALMM, but they will not, remain in ALMM for years, because the customer automatically graduates towards the higher efficiency and best technology, new technology product. It's like iPhone. You have a new iPhone and nobody wants an old iPhone. So it's like that. So that is also happening. The other thing is that the industry is moving towards the integrated model. Backward integration is becoming a key. So you will see that the capacities, your cell capacities are going to, in the future, determine your selling capabilities also. So you will see small players will also vanish over years, and backward integration will become more and more important. And so we are working on that aspect only. So our focus is not to grow our module capacities beyond 9-10 gigawatt, because that is a respectable where you can get economies of scale. And we will focus on building our backward integration towards cell, towards ingot wafer, and also bring in more products, which are supportive to our solar module business in this industry. So that's how the industry is transitioning.
Oh, okay. That helps me a lot. So, and just like last question from my end, sir. So once our cell, comes online, maybe next year, majorly the revenue, I think the margins will come in the H2 of next year. So the differential like that we get, like the extra, we will not have a higher top line, but we think we'll get a better profit margin. So that would be how much, like, because some players are saying that, that could become as high as 25%. I think some are saying 20%. So what do we feel that what would it be like when we have cell and so modules both together? What would be our, EBITDA margin roughly?
The domestic cell also command a higher price, because the modules also sell at a higher price. So it will give additional delta in terms of revenue also. In terms of EBITDA, we feel that it will give a upside of about additional cell, whatever we produce, will give an additional EBITDA on that volume by 3-4%. So we are not, today it is high, is definitely much higher, but we want to give a conservative outlook, because cell capacities are also building. So, but yeah, 3-4% is definitely additional EBITDA for that kind of additional volume of cell which we are building.
So just to rephrase what Mr. Mathur has said, we expect additional EBITDA of 3-4% on the volume sold through using our own cell produced. Otherwise, it will be in the range bound.
Okay. Perfect. Thank you so much. All the best, sir. Thank you.
Thank you.
Thank you. The next question comes from the line of Aniket Madhwani from Step Trade Capital. Please go ahead.
Hello. Yeah. Yes. Good morning.
So, good morning. So could you please clarify on the phase 2 of the cell manufacturing? So when do you expect? I mean, you mentioned 6 to 9 months. So 6 to 9 months from H2 FY27, am I right?
Sorry, your voice is not quite clear. Can you speak little further from the mic?
Hello.
Yeah, you are audible, but your voice is not quite clear.
So, am I clear now?
Yeah. I think it's better.
Yeah. So my question was, can you please clarify on phase two of cell manufacturing? You mentioned 6 to 9 months it will take. So is it from H2 FY27? Am I right?
6 to 9 months? What?
6 to 9 months to get operational for phase two.
Oh, okay. No, what I'm saying is 6 to 9 months from the execution of the first phase.
Okay.
So what I'm trying to say is, what I'm trying to say is the 2.4 gigawatt should start giving revenue from the Q3 of next financial year, and the phase 2, which is another 2.4 gigawatt, should start giving revenue from first or second quarter of FY28.
Okay. FY28 Q2. Okay. And you mentioned the CapEx will be done of around 1,300 CR for cell manufacturing, right? For 2.4 gigawatt.
For 2.4 gigawatt, 1,300 crore capex.
1,300 crore, yeah. So the CapEx will be done through debt or internal accrual?
So it will be the mix of both internal accruals and the debt, which we have already secured from the National Life Bank.
Okay. Could you share the proportion of debt and the bifurcation of the CapEx?
Debt equity ratio in any project is 70:30. So where 70 is the debt and 30 is the equity.
Okay. Okay, fine. Thank you.
Thank you.
Thank you. The next question comes from the line of Sani Bhatia from AM Investments. Please go ahead. Sani Bhatia, you can go ahead with your question. Sani Bhatia, can you please unmute your line and go ahead? The line for Sania Bhatia is disconnected. We'll move ahead with the next question. The next question comes from the line of Charchit Malu from Genuity Capital. Please go ahead.
Hello. Am I audible, sir?
Yeah.
Thanks a lot for the opportunity. I might have missed. Can you just please explain the impact of GST rate cut on the Q2 numbers?
Can you confirm the impact of GST? So the GST on our numbers does not have any impact. It's only that our sales got deferred. So our sales got deferred from September quarter 2 to quarter 3. So that is the only impact. But overall, GST impact is positive for the industry because any project has module and inverter is considered 70% of the project cost. So blended, any project used to have 13.8% GST blended for a project, which has now reduced to 8.9%. So the overall impact is about 5%. Overall impact in a project cost is about 4.9%, which is positive. So which overall is very positive for the industry, which will only give more boost for more installation because the system cost reduces, the energy cost reduces, and translates into higher volumes.
Got it. And sir, like, I'm new to the industry of cell. So I think there are two types of cell, the cylindrical, the expensive one, and the is less expensive one. So like, which kind of capacity are we going for?
Sorry. No, these are not battery cells which we are talking of. We are talking about solar module, also has cells, solar cells. So solar cells
Okay.
are mainly, the technology is two types. One is P-type, the other is N-type. And the industry has moved towards N-type. So N-TOPCon technology is the technology which is more, so like modules which we are selling out of 4.8 gigawatt, 4.2 gigawatt is TOPCon. So TOPCon is the latest technology which has got, the industry has moved in the last 2 years towards TOPCon. And our cell technology is also TOPCon cell only, and TOPCon cell. N-type
Got
is,
it.
yeah.
Yeah. Thanks a lot, sir.
Thank you.
Thank you. The next question comes from the line of Riddhi Agrawal from Individual Investor. Please go ahead.
Thank you for the opportunity and congratulations on good set of numbers. So my question is on the BESS segment. Like, what are your plans for scaling this segment? And as we go through the RHP, you were awarded with 30 megawatt of projects. So any current status and execution timeline on this?
Okay. So, the industry is also moving towards round-the-clock projects, which are also called RTC projects. And solar with BESS is becoming more and more common. And our focus is also on, executing these projects. So we have taken this, the project which you are talking of is the Bihar project, which is currently, the land is being finalized and will be given by the DSPGCL. Once that is given, then we will start work on it, and we should expect all this to happen in this financial year itself. Along that, we are also bidding for other projects as well, BESS projects. So you will see more and more, our EPC projects will have a good share of solar with BESS as well as standalone BESS projects. We are also looking to get into BESS storage, which is those 5 megawatt hour containerized battery solutions to begin with, and then we will slowly set up the assembly and the backward integration into it. The government policies and also the technology is still not fully sorted. That is why India has battery pack manufacturing, has containerized assembly happening, but the battery cells are still not getting manufactured in India. There are projects which are being talked, but still in the nascent stage. So as the thing stabilizes both on the policy front as well as on the technology front, which we feel is very close on the horizon, we will be getting into that segment as well. Till then, we will be setting up projects with BESS and also containerized solutions as well as backward integrating into assembly of battery cells in India.
Okay, fair enough. So my next question would be just an informal question. Like, there's a rumor in the solar market, like Jio is announcing or planning to announce to enter into the solar industry. So any viewpoint on it, and if it happens, so any negative impact on our company, because we know the line strategy. So your view on this?
Ma'am, we cannot comment on any competitor's strategy. It's an open market, free market, and everybody can enter this with their strategy. And we have large corporates currently also in this industry and everybody is competing. The market is big enough for everyone to survive and play. As long as we kind of bring value to our investors and our management and stakeholders, we are not worried about that competition.
No, that is fair on your part, being the promoter of the company. But we all know, and my question is your viewpoint on behalf of how it will impact the company, industry, because we all know it's the Reliance View cost strategy. So definitely the market will be impacted. So right now you are competing with other competitors on the basis of, say, revenue or capital utilization. So if such things like they actually have a disastrous effect on the industry. So are we justified to say that we can compete with them on the cost also? So because that is their major strategy. So are we well equipped right now to take this shift in the market?
Yes, ma'am, we are well equipped to handle any competition. What I can tell you is that India is at a cusp of a major energy revolution. Be it terms of our per capita energy consumption, be it the kind of growth which we are expecting in the energy demand once, since we want to become a developed country by 2047, we have to grow at the rate of 8 to 9%. So energy demand is going to grow. We have sunny days which are over 300 days. So energy, whatever comes from renewable energy, major share will come from solar. If you see all these factors, also green hydrogen is also going to play, which will also be a big boost to solar. So, India has to lower its dependency and foreign exchange outflow on oil. So these are all factors which will be very highly boosting. Electric vehicles also are going to get powered by renewable energy and solar. So we are going to see a much bigger market, much higher demand than what we have expected, what we have seen over the years. And these are big positives for the industry. And we feel that there is enough space for players to continue to thrive and survive. And we are among those who have big plans and who have executed and demonstrated in the past as well. So we are very, very positive and very, very confident of a great future for our company as well as for the industry.
Okay, thank you so much and all the best.
Thank you, ma'am.
Thank you. We take that as the last question. I would now like to hand the conference over to Prashant Mathur from Saatvik Green Energy for closing comments. Thank you, and over to you, sir.
So thank you very much, ladies and gentlemen. Thank you for being such patient listeners and staying with us for almost an hour. We truly appreciate your time and interest in Saatvik. Q2 and H1 FY26 have been strong and defining periods for us, reflecting solid financial performance, improved balance sheet strength, and the successful completion of our IPO. These results reinforce the resilience of our business and disciplined execution. I would like to thank all our employees, customers, partners, and stakeholders for their continued trust and support. We remain fully committed to creating long-term value and strengthening Saatvik's leadership in India's renewable energy landscape. Thank you once again for joining us today. Thank you. Thank you.
Thank you. This brings the conference to an end. On behalf of Saatvik Green Energy, we would like to thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.